Ready?
Yes, sir. We can start, sir.
Okay. Shall we start?
Yes, sir. Yes, sir.
Okay. Good afternoon. Now we are in this paper. I think this will be uploaded in a CBO site.
I've already
I think
uploaded.
they would already uploaded or will be uploaded. Okay, sir. Good. Now we are going to see maybe in the 2 hours, 2 hours, 30 minutes, whatever possible. We will try to see from the examination point of view, particularly in the digital banking, what are all the types of questions are expected. So I made a question and answer type, and wherever it is required, some few presentations are made in the means of a PowerPoint. So first of all, let us see the clean note policy. So from the clean note policy, for all levels, questions are being asked. Okay, so in depth we will see, because from Reserve Bank of India site I have downloaded, and from our bank circulars I have downloaded. So all possible questions will come. We'll go through it. And this clean note policy with the presentation, also only few questions I have given here. A detailed presentation is there, that also we will see. Now, RBI issues guidelines for penalties and incentives for bank branches as per which section of which act for realizing the objectives of the clean note policy. So RBI gives, these are all the incentives bank will get if they do certain activities. RBI will say if these are all the penalties we will impose on the banks if the banks are not that is carrying out our instruction. So therefore, with regard to currency management, I'm talking about with regard to currency management, what are all the penalties and what are all the incentives bank will get, RBI will impose on certain guidelines. So under which section of which act? The two sections, then two acts, section 35A of the Banking Regulation Act and section 45 of the RBI Act. Two sections are section 35A of the Banking Regulation Act and section 45 of the RBI Act talks about so various incentives and penalties RBI will impose on banks. Section 35A of Banking Regulation Act and section 45 of the RBI Act for question number 1. Question number 2, incentive for distribution of coin per bag in rural areas, including the additional incentive as on date is. Let's quickly go through the presentation and you'll be able to answer the questions. Now let us see what are all the incentives RBI gives first, then we'll go to the penalty. So with regard to the currency management, so incentives given by RBI for opening and maintaining currency chest at centers having population less than 1 lakh in underbanked states. I think this question was asked for some cadre last year in the 2023 November exam. Incentives given by RBI for opening and maintaining currency chest at centers having population less than 1 lakh and in underbanked states. So in underbanked states where population is less than 1 lakh, if the banks are opening currency chest and maintaining the currency chest, RBI gives certain incentives. What are they? RBI divided them into the centers into northeastern region other than northeastern region. So what is that? Northeastern region and 1 minute. I have not. Okay. This is the 1 minute, sir. Okay, good.
Yes, sir.
Okay. Now, RBI has distinguished between northeastern regions and other than northeastern region. If a currency chest in population less than 1 lakh area in underbanked states, other than northeastern regions are opened and maintained by banks, what is the capital, what is the incentive banks will get? Reimbursement of 50% of the capital cost subject to a maximum of rupees 50 lakhs. Okay, reimbursement of 50% of the capital cost subject to a maximum of rupees 50 lakhs. What do you know? Capital expenditure. Suppose if the same currency chest is a northeastern region, reimbursement of 100% of the capital cost subject to a maximum of 50 lakhs. Here 50%, 50 lakhs, here 100%, 50 lakhs. Suppose for the revenue expenditure. So if it is other than northeastern region, reimbursement of 50% of the revenue expenditure for the first 3 years. If it is northeastern region, reimbursement of 50% of the revenue expenditure for first 5 years. Underbanked states, population less than 1 lakh, other than northeastern region, capital expenditure 50% subject to a maximum of 50 lakhs, northeastern region 100% capital expenditure subject to a maximum of 50 lakhs. And revenue expenditure 50% maximum for 3 years other than northeastern region. Again here 50% maximum for a period of 5 years in northeastern region. This is one question. If they ask the question, you should be able to answer. Then second incentive. What is the incentive for exchange of soiled note? Before going further, what do you mean by a soiled note? There are two things will come under a soiled note. So the note which is become so wear and tear is so much which you cannot reissue to the general public. That is called a soiled note. And another definition of a soiled note, a note cut into two pieces and both the pieces are intact available. That is also called a soiled note. Earlier, that note was called as a cut note. Now there is no concept of cut note. In soiled note remittance itself, you can send this note. So a note which has become so old, that is wear and tear is so high, you are not able to reissue it to the general public. That is a soiled note. And a note is cut into two pieces and both the pieces are available intact. That is also called a soiled note. Suppose if banks are exchanging soiled note for general public, please note, exchange of soiled notes or adjudication of mutilated notes, not only for your customers, for the general walk-in customers also. Okay, what is the incentive for exchange of soiled note? Rupees, the banks will get an incentive of rupees 2 per packet for denominations up to 50. That is, you have 1 rupee, 2 rupees, then you have 5 rupees, 10 rupees, 20 rupees, and 50 rupees. Up to and including 50 rupees denomination, if you exchange a soiled note, that is per packet means per 100 pieces. Per 100 pieces of the soiled note exchanged up to the denomination of rupees 50, banks will get 2 rupees per packet. If the denomination is 100 and above, for exchanging the soiled note, banks will not get any incentive. Next point. An incentive for adjudication. So we say soiled note exchange or mutilated note. We won't use the word exchange. We use the word adjudication. Incentive for adjudication of the mutilated note. So what is a mutilated note? A note, there are three definitions, 3 points will come here. Please note it down. A note cut into two pieces and one piece is missing. That is a mutilated note. A note cut into more than two pieces and all the pieces are available. That is also a mutilated note. A note cut into more than two pieces and some pieces are missing. That is also a mutilated note. So a note cut into two pieces, one piece is missing, mutilated note. A note cut into more than two pieces, all pieces are available. That is also a mutilated note. A note cut into more than two pieces and some of the pieces are missing. That is also called a mutilated note. If banks adjudicate the mutilated note, the incentive banks will get is rupees 2 per piece irrespective of the denomination. Whichever denomination banks are adjudicating to the general public, they will get 2 rupees per denomination. Here 2 rupees per packet up to denomination of 50 only. For adjudication, irrespective of the denomination, rupees 2 per piece banks will get. Additional incentive for distribution of coins from 1/9/2021. So back in all types of branches, whether it is rural area, semi-urban, urban, or metropolitan area, banks will get an incentive of rupees 65 per bag in all the areas. On the other hand, if it is distributed through rural and semi-urban areas, banks will get an additional incentive of rupees 10 per bag. That means in a rural area, banks will get 75 rupees. In semi-urban area, banks will get 75 rupees. In all other areas, banks will get only 65 rupees. Service charges for cash deposit by non-chest banks in the currency chest. CC stands for currency chest. What do you mean by non-chest bank? If in a center, if a bank is not having a currency chest, that bank is called a non-chest bank. So in a center, if a bank is not having a currency chest, that bank is called a non-chest bank. So taking up, for example, Let's assume HDFC Bank is not having a currency chest in, let's assume they are not having a currency chest in places like that is, you take Trichy. Let's assume HDFC Bank is operating in Trichy and peripheral areas, but they are not having a nearby currency chest in Trichy or some bank. So what they will do, they will take up with RBI. Suppose if Canara Bank is having a currency chest in Trichy, RBI will ask, they, after talking to both the banks, RBI will link the HDFC Bank to Canara Bank in Trichy. There, the HDFC Bank is a non-chest bank. Canara Bank is a chest bank. Suppose if a non-chest bank deposits currency notes in a chest bank, so in the currency chest of a bank which is having a currency chest, so what is the incentive the currency chest banks will get? For example, large modern currency chest. So if it is a large modern currency chest, so the currency chest banks will get rupees 8 per 100 pieces. If it is other than large modern currency chest, they will get rupees 5 per 100 pieces. So the non-chest banks which are not maintaining currency chest, if they want to remit cash to their currency chest as per tie-up, so the banks which are maintaining the currency chest will get an incentive of rupees 8 per 100 pieces or rupees 5 pieces, depending upon whether it is a large modern currency chest or other than large modern currency chest. The difference between the two, large modern currency chest and other currency chest, we will see in some other slide. Once they ask, what is the definition of a large modern currency chest? We will see before concluding this clean note policy. Okay, these are all the incentives banks will get from Reserve Bank of India from the currency management. Now, what is the penalties banks will RBI will impose on the banks for not adhering to the systems and procedure or whatever RBI has told with regard to currency management? Penalty for shortage of notes in soiled note remittance to RBI. So let us assume you know what is a soiled note. So that is after taking after whatever soiled notes you are collecting, you will bundle it up and you will send to currency chest. Currency chest in turn send them to Reserve Bank of India for remittance. At the time of sending the soiled notes to RBI, in this soiled note, if RBI note sorting machines found out any shortages, RBI will impose penalty on the banks. Now, what is the penalty? We are going to see. For notes up to denomination of rupees 50, penalty is rupees 50 per piece in addition to the shortage. For example, 1 rupee notes, 2 rupee note, 5 rupees note, 10 rupees note, 20 rupees note, 50 rupees note. In a soiled note remittance, a 50 rupees denomination, let us assume 150 rupees note is missing. The penalty is 50 rupees plus 50 rupees 100. On the other hand, in a soiled note remittance of 10 rupees, one 10 rupee note is missing. The penalty is that is 50 rupees plus 10 rupees. That's why I mentioned that for notes denomination up to 50, penalty is rupees 50 per piece. Whether it is 5 rupees, 2 rupees or 1 rupee or 10 rupees, 20 rupees, 50 rupees, the penalty is 50 plus the loss. So 10 rupees note you are sent a soiled note, one piece shortage has found out. So RBI will impose a penalty of rupees 50 plus 10 rupees 60. If they ask like that also, you should be able to answer. Okay, then for notes in denomination rupees 100 and above equal to the value of the denomination per piece in addition to the shortage. So if it is 100 rupees and above, for example, 50 rupees what you are paying, 50 plus 50. Similarly, if it is 100, 200, 500 or 2000, whatever it is, suppose one 2000 rupees soil note remittance or one 500 rupees soil note remittance, one piece is the shortage. The penalty is 500 and the loss is 500. 1000 rupees banks have to pay to RBI. Whatever penalties or RBI is imposing, that will be immediately debited to the current account of the concerned banks, which is maintained with RBI. They will not request the banks to transfer any money to them. Instantly, the current account will be debited and a note will come to the concerned currency chest. Okay, sir. Now penalty for shortage of soiled notes in the soiled note remittance. So up to 50 rupees denomination, 50 rupees per piece in addition to the loss. 100 rupees and above denomination, that is whatever the denomination, that is the penalty, plus for the shortage, another equal amount. So 100 rupees means 100 plus 100. Okay, penalty for shortage of notes in soiled note remittance to RBI. Then penalty for shortage of notes and coins in currency chest balance. First, what we saw, so banks will remit the soiled notes to RBI. In that, if they found any shortage, what is the penalty? Now, currency chest balances are maintained. It is subject to periodical inspection by various authorities. At the time of periodical inspection of the currency chest, if some shortages are noticed in the currency chest balance, what is the penalty banks have to pay to RBI? The same thing. Up to denomination of rupees 100, penalty is rupees 50 per piece in addition to that is shortage. Here also, denomination of 100 and above, penalty is equivalent to the denomination plus the shortage, whatever the value, 100 plus 100. The same thing what we saw there also. Soiled note remittance, whatever penalty, the same penalty also is there for the shortage of notes and coins in the currency chest balance. If it is coins, let's assume 100 rupees coin bag is missing. So 100, suppose that 100 rupees coin bag, let's assume it consists of 1000 rupees. So if there is a shortage, 1000 plus 1000 you have to pay. Here only up to 50 rupees. So you have to pay 50 rupees plus the shortage. For example, 10 rupees means 50 rupees penalty plus another 10 rupees, 60 rupees. 100 rupees and above, same thing, 100 plus 100, 200 plus 200. In coins, for coins of all denominations, penalty is equal to the value per coin in addition to the shortage. 50 coins are missing and 10 rupees means 500. So 500 plus 500, banks have to, RBI will debit penalty, the current account of the banks maintained with RBI. Penalty for shortage of notes and coins in currency chest balance. Okay. So we have seen shortage in the currency soiled note remittance to RBI, shortage in the currency chest balance of that is of the banks wherever it is found out. Then penalty for mutilated notes deducted in soiled note remittances and currency chest balance. Both it is the same. If mutilated is found out in the currency chest balance, some mutilated notes are found out, or the mutilated notes or the shortage. You are sending the soiled, so when you are sending a soiled note, along with the soiled note, you should not add the mutilated note. Mutilated note remittances should be sent separately. Penalty for mutilated notes deducted in soiled note remittance and penalty for mutilated notes found out in the currency chest balance. So for both, there is the same penalty, rupees 50 per piece, irrespective of the denomination, in addition to the loss. So whether it is 1 rupee, 2 rupees, 5 rupees, 10 rupees, 20 rupees, 50 rupees, 100 rupees, 200 rupees, 500 rupees, 2000 rupees, so the penalty is 50 rupees. Suppose if one 500 rupees, that is what you say, mutilated note, is found in the currency chest balance, or if it is in the soiled note remittance, for that 500 rupees, the penalty is 50 rupees is the penalty, irrespective of the denomination. Plus 500 rupees is the loss, 550 rupees you have to give to RBI. So this is the guideline with regard to mutilated notes found in the soiled note remittance or in the currency chest balance. So that is working. So we saw now soiled note remittance shortage, soiled note find out in the currency chest balance. Then we saw the third one is, sorry, then we saw penalty for mutilated notes found in the soiled note remittance or mutilated notes found in the currency chest balance. Now the next one is counterfeit notes deducted in soiled note remittance, modified guidelines in 429/2024 HO circular. So in 429, that they introduced a concept called CPM. So I will quickly explain it. You will be able to understand. Okay, anyway, it is a post-lunch session. Don't worry, I will explain it very quickly. So suppose if the what is a counterfeit note, you know I need not tell. What is a guideline with regard to lodging a police complaint with regard to counterfeit notes? Up to including 4 pieces in a single remittance, a police complaint to be lodged at the end of the month. If the number of pieces is more than 4, that is 5 and above, if the number of pieces are more than 4, that is 5 and above, in a single remittance, counterfeit notes are found out, a police complaint to be lodged immediately. Okay, after lodging the police complaint, what you have to do? You have to follow with the police authorities, collect back the counterfeit notes, and we have to preserve it in our double lock. Till what time the counterfeit notes to be preserved? Till 3 years from the end, from the date from which we got back from the police authorities. These questions they will ask. So counterfeit notes deducted 4 pieces up to including 4 pieces in a single remittance. Report to be police, local police, end of the month. If it is more than 4 pieces, that is 5 pieces and above, immediately it has to be reported to police. After reporting, follow up with the police authorities and collect back the, that is for 40 notes. Here one question they ask. At the time of finding out a 40 note, an acknowledgement has to be given to the person who has given the 40 note to you. So that acknowledgement has to be signed both by the tenderer, that is the person in whose remittance you found out the 40 note, and that has to be signed by the cashier also. Okay, that is the acknowledgement to be given to the tenderer. That acknowledgement has to be signed both by the cashier and by the tenderer. Even if the tenderer says he will not sign without his signature, you have to hand over. The cashier has to sign and give the acknowledgement to the tenderer that they asked once, who has to sign the acknowledgement. Okay, next question. So after reporting the police, you get back from the police and it has to be preserved with you for a minimum period of 3 years from the date of receipt from the police. The next question what they asked last time is, after 3 years is over, what to be done with the forged notes? What to be done to the counterfeit notes? After 3 years is over, those notes are to be sent to the issue department of RBI. They ask which department. So issue department of RBI, these notes to be returned after the specified period. That is one portion. The second portion is, if there is a court case, if there is a court case is happening, so after the court case is over, the notes have to be got back by the branches and it has to be preserved for a period of 3 years after the court case is over. With regard to police authorities, 3 years after you get back from the police. With regard to court cases to pieces, 3 years after the court case is over, till such time, these notes to be preserved by the bank branches. Then after 3 years is over, it has to be returned to the issue department of RBI. Okay, this is not in the slide. I am explaining to you because questions may come. There you get a confusion. Up to means including 4 pieces. 5 pieces and above or more than 4 pieces. There are only some confusion. People used to come and tell, sir, questions are very easy, answers are tricky. There only they will make the confusion for you. So up to including 4 pieces at the end of the month. So above 4 pieces, not 4 pieces and above 4 pieces. That means 5 pieces and above. Immediately, police complaint to be lodged. What you have to do after the complaining the police case or after what you have received from the court, what you have to do, I told you already. Now, if the counterfeit notes are deducted in soil note remittance, what is the so now counterfeit notes deducted in the soil note remittance, counterfeit notes deducted in the currency chest balance. So 494.29/24 gives certain changes. What is that we will see. If the denomination is 5, 10, 20, so what is the penalty for counterfeit notes deducted in the soiled note remittance? Recovery of loss to the extent of notional value of the counterfeit note. Example, one piece of rupees 20 is deducted, penalty is rupees 20. That's all. You cannot give another, you need not give another 20 rupees. For denomination of 5, 10, 20, if a counterfeit note is deducted in the soil note remittance, then banks have to pay a penalty of equal to the denomination of that counterfeit note. That is up to 5, 10, 20, you have to give a penalty of 20 rupees only. For example, 20 rupees is a counterfeit note, in the soil note remittance, pay only 20 rupees. Suppose if the denomination is 50 and above, if the denomination is 50 and above, penalty is 50 rupees plus 25 rupees of recovery of loss. Recovery of loss is 50 rupees plus 50% on the notional value. For example, if one piece of rupees 50 deducted, the penalty is 50 plus 25, that is rupees 75 is the penalty. Up to 20 rupees, the penalty is the loss. That's all. So no more than that. 10 rupees means 10 rupees over. In the case of a 50 rupees counterfeit note deducted in the soil note remittance, you have to pay 50 rupees plus 25 plus 50% on the notional value. That is 50% of 50 rupees is 25 rupees. 50 plus 25, 75. Now, 100 rupees and above denomination only, back, that is, they have introduced a new concept called CPM. What is CPM? So that is a graded penalty linked to CPM. What is CPM? CPM is counterfeit notes per million CPM. counterfeit notes per million pieces of soiled notes processed at RBI per currency chest. CPM is counterfeit notes per million pieces of soiled notes processed at RBI per currency chest. If the CPM, the penalty with regard to counterfeit notes deducted in the soiled note remittance of rupees 100 and above is linked to CPM. So if the CPM is this much, this is the penalty. If the CPM is this much, this is the penalty. So a grade is given. If the CPM is less than 5, penalty is 100% of the notional value of the counterfeit note deducted. That's all. So let's assume the CPM is less than 5, 200 rupees note is deducted. So 200 rupees. Now you compensate to 200 rupees. That's all. If CPM is equal to or more than 5 but less than 20, penalty is 150% of the notional value of the counterfeit note is deducted. Let us assume that is 200 rupees, 200 rupees are found out in a soiled note remittance, 200 rupees of counterfeit note, 600 rupees. So the penalty is, when we calculated the CPM, it comes more than 5, less than 20. So how much pieces you found out? 3 pieces. What is the CPM you got? More than 5, less than 20. So in that case, so 150% of the notional value, 600 rupees is your penalty. Find out that is the 600 rupees is the that is counterfeit note. 150 of that you have to give as the penalty to RBI. Then equal to or more than 20% CPM, 200% of the notional value deducted. By means of an example, I made a study. I will make it clear to you. Now, CPM formula. CPM is equal to number of counterfeit notes in 100 rupees and above denomination. Okay, whatever denomination into that is 1 million means 10 lakh. So number of counterfeit notes found out. It may be in any denomination, 100 and above or 200 and above, whatever it is, multiplied by 1 million. That means 10 lakhs divided by number of pieces in the remittance of rupees 100 and above. For example, let us assume 100 rupees soiled note remittance is sent to RBI. Number of pieces in that remittance, let us assume 100 rupees is 11 lakh 92,000. Let us assume RBI deducted a counterfeit notes of 40 pieces. Now, what is the penalty? RBI banks have to pay to RBI. So, what has happened? So, we found out we have sent a remittance of 100 rupees soil note remittance. So, total number of pieces in that 100 rupees is 11 lakh 92,000. In that, 40 pieces are counterfeit notes. Then what is the penalty bank has to pay? Let us see. Penalty is equal to first the notional value. So 40 pieces you found out, 40 into 100, each piece is 100, 4,000 rupees you have to set aside because it is a counterfeit note. 400 rupees we first keep aside. So there is a shortage. We call it as notional value of the counterfeit note, 4,000 rupees. Then what is CPM? Based on the CPM, you find out what is the penalty. So 4,000 plus that penalty to be paid to RBI. What is CPM? CPM is equal to, I told you, number of counterfeit notes. That is 40 is the number of counterfeit notes you found out. What is the number of notes, pieces remitted? So number of pieces per million. 40 into 10 lakh divided by, so number of pieces of remittance, 11 lakh 92,000. So 40 into per million is equal to 10 lakhs divided by 11 lakh 92,000 is equal to 33.56. I told you if CPM is more than that is 20, then the penalty is 200% of the fake note deducted. So fake notes are deducted to the extent of 4,000 rupees, isn't it? So 40 fake notes. So 40 into 100, 4,000 rupees fake notes is deducted. CPM is more than 20. When the CPM is more than 20, 200% of the notional value. So notional value is 400, 200% of the notional value is 800, sorry, 8,000. 200% of the notional value of rupees 4,000 is 8,000. So 4,000 plus 8,000, 12,000 is the penalty to be remitted to RBI because it is 100 rupees denomination, 40 pieces, and CPM is more than 20. Like that, that is short, that is for the, in the soil note remittance, if fake notes are deducted up to 5, 10, 20, then 50, then 100 and above. For 100 and above, we use the CPM methodology. CPM is, that is counterfeit notes per million of pieces. Okay, this is the way you have to do. Then So that is counterfeit notes deducted in the child note remittance. Now, counterfeit notes deducted in the currency chest balance. Suppose in the currency chest balance, if the counterfeit notes are deducted, what is the penalty? So 429 by 2024 talks about penalty for counterfeit notes deducted in the soiled note remittance and counterfeit note deducted in respect of currency chest balance. So here we'll see. So 5, 10, 20 denomination, recovery of loss to the extent of the notional value of the counterfeit notes. That's all. So recovery of loss, 1 rupee piece means the notional value is 5 rupees, 5 rupees you have to pay. Then rupees 50. 50% of the notional value plus the recovery of loss. Example, 51 piece notice means 50 plus 25, like the soil road remittance only, fake note. So 75. Suppose if it is 100 and above, what we did in 100 and above there, we calculated the CPM. Based on the CPM, less than 5, 5 to 20, more than 20, penalty is fixed. Less than 5, 100, more than 5 up to 20, 150%, more than 20, 200% of the notional value is the penalty. Here, there is no such concept of, that is, what you say, the soil note remittance. That soil note remittance, the fake note is different. Here, there is no concept called the CPM. Here, straight away, 100 rupees and denomination is found out in the currency chest balance. Then whatever the value counterfeit notes found out, you have to pay, plus the penalty is 200% of the notional value. So for example, 100, 500 rupees piece is deducted, counterfeit note in the currency chest balance. So 500 rupees you have to replace. Then 200 penalty is 200% of the 500 rupees. 200% of the 500 rupees is 1,000, 1,500 rupees is the penalty. So straight away 200. There we get to 200 only if the CPM is more than 20. Here no concept of CPM for all denominations of 100 and above, notional value plus 200% of the notional value is the penalty with regard to fake notes deducted in the currency chest balances at the time of inspection. So it was circular 429/24. Then counterfeit notes returned to the tenderer without impounding. Across the counter, somebody is remitting. You found out it is a fake note. Instead of impounding, you are giving back to the customer or general public, asking him to replace another note. So in that case, what is the penalty? Disbursement of counterfeit notes over the counter. So you are giving the counterfeit notes over the counter. Dispensation of counterfeit notes through ATMs. So through ATMs, there is some counterfeit notes are being disbursed to the general public. So the penalty is rupees 10,000 for each instant. So these things are told in 429/24. Then, so this is already existence. Non-compliance with operational guidelines by currency chest, like example, non-functioning of the CCTV recording or DVR preserving. So currency chest DVRs to be present for a period of 90 days. All of you know. So CCTV is not functioning, DVR is not being preserved, branch cash and documents, etc., are kept in the strong room of currency chest. For that, there is a penalty. Non-utilization of note sorting machine, then non-conducting of surprise inspection of currency chest by bank officials. If these things are noticed by RBI, the penalty is rupees 5,000 for each instance of irregularity. Penalty shall be enhanced to 10,000 in cases of repetition, recurrence of irregularity in consecutive inspection. Okay. Now, the other one is violation of any of the terms of agreement with RBI for operating and maintaining currency chest or deficiency in services and providing exchange facilities are deducted by RBI officials. There is non-issue of coins over the counter to any member of the public in spite of having stock, refusal by any branch to exchange soiled notes, like that it comes. Non-acceptance of lower denomination notes, denial of facility service to link the currency chest to other banks, etc., etc. Deduction of RBA of deduction by mutilated, built-up counterfeit note in reusable packets prepared by the currency chest branches. In all these things, if it is found out, the penalty is 10,000 rupees for any violation of agreement or deficiency of service. In the case of then 5 lakh, in the case of more than 5 instances of violation of agreement, deficiency in service by the currency test branches in consecutive inspection cycles or earlier, the levy of such penalty shall be placed in the public domain. Okay, sir? So that is with regard to other points in the changes which it has come, that also I'll quickly go through. Data in counterfeit note detected, forged note vigilance cell. Every bank should have a forged note vigilance cell in the head office of the bank to report to the issue office of RBI before 7th of the succeeding month. Before the guideline comes, earlier all branches to send directly to RBI. Now it underwent a change. The forged note vigilance cell, the direction with regard to counterfeit note, whether you found out, if it is nil, everything should go to RBI before 7th of the succeeding month from only one point, that is forged note vigilance cell. Forged note vigilance cell to send status reports as at the end of March and September to central office of RBI, copy to issue office of RBI. Earlier it was quarterly. Now it is changed to half-yearly. So what are the changes that may come? So that's why I given here. So then who has to, that is, I told you, no, if the bank officials are not checked the currency chest balances, there is a penalty. Now who has to check what is the periodicity from the bank? The balances of each currency chest should be verified at least at an interval of once in a month by an officer not connected with the custody of the chest, and 2% of the balances in each denomination of 100, 200, 500, and 2000 to be verified through the note sorting machine. So once in a month, by an officer not connected with the currency chest, has to count everything. Then through the note sorting machine, 2% of balances in each denomination to be verified by him, whether the numbers are all correct. Then the currency chest balances should be verified at an interval of 6 months by the officials from the controlling office, RO, CO, etc. of the bank by packets and bundles, and 5% of the balances in all denominations should be verified through the note sorting machine. So this is with regard to, so this question they asked year before last. So for example, on the 11th, 17th, you are having for 3 cadets, 1 to 2, 2 to 3, 3 to 4. So once an examiner sets a question from one topic, the same questions in different length of difficulty will be fixed for each cadet. That's why I have put it here. Then banks should ensure that cash receipts in the denomination of rupees 100 and above are not put into recirculation without note being machine processed for authenticity. Then, I told you what is a large modern currency chest. This question was last one. Large modern currency chest should have a minimum area for strong room, vault, and processing capacity based on the minimum area of the strong room or vault of the currency chest, and also based on the note sorting capacity only, processing capacity only, whether a currency chest is a large modern currency chest or not, it is fixed by RBI. Suppose the area of the currency chest is the square vault, that is a safe room, strong room, is 1500 square feet. It is called a large modern currency chest. Suppose if the currency chest in a hilly area or inaccessible area, if the area is 600 square feet, then also it is called a large modern currency chest. Coming to the processing capacity, other than not hilly areas, in the 1500 square feet, and the processing capacity 6,60,000 pieces of banknotes per day, it is a large modern currency chest. In the case of hilly area, the capacity to sort the notes is 2,10,000 pieces per day. It is also called a large modern currency chest. So A is correct, B is correct, C is correct, D is correct. So area and counter the number of pieces of connecting. Based on that, the large modern currency chest, it is defined by RBI. Non-chest bank branches, if they remit bank to the currency chest bank branches, if the currency chest is a large modern, then 8 rupees per 100 pieces that bank will get commission. Other than large modern, 5 rupees per piece that currency chest bank will get. Then what is the minimum chest balance? This they asked once. What is the minimum chest balance limit of large modern currency chest? Rupees 10 billion, rupees 1000 crores. 10 million, or sorry, 10 billion, or we call it as 1000 crores. Then cash out at any ATM of more than 10 hours in a month will attract a flat penalty of rupees 10,000 per ATM effective from 1/10/2021. Once if the ATM there is cash out for more than 10 hours in a month, a flat penalty of 10,000 rupees per ATM we have to pay. They asked with effect from which date? The date is 1/10/2021. RBI issues guidelines for penalties and incentives for bank branches as per Section 35A of BR Act and 45B of the RBA Act for realizing the objective of the clean note policy. Then this question also they asked once. The currency chest shall invariably report all transactions through which portal. The portal's name is CYMCC portal to RBI on or before which time 7 p.m. All currency chests to report their balances to RBI before this time. If it is not done, what is the penalty? They ask for one cadre. Penal interest for delay or wrong reporting to currency chest transaction before 7 p.m. Bank rate plus 2%. Bank rate plus 2%. What is the maximum number of soiled notes that can be exchanged for general customers in a day free of cost? So 20 pieces with a maximum value of 5,000 rupees. So we can exchange to the general public free of cost in a day, and that is 20 pieces of the soiled note with a maximum of 5,000. So what about the mutilated note? Mutilated note is with regard to adjudication. With regard to adjudication of mutilated notes, so what is the condition? If a bank is having currency chest, currency chest bank branches, if they are having currency chest, then there is no restriction with regard to adjudication of the mutilated note. Non-currency chest banks branches can run in a day maximum 20 pieces of the mutilated note adjudicate. Okay, for soiled note, whether currency chest bank branches or non-currency chest bank branches, 20 pieces value 5,000. With regard to mutilated notes, chest bank branches or non-chest bank branches. Chest bank branches, no restriction. Non-chest bank branches, they can adjudicate 20 pieces to the maximum value of 5,000 rupees. Let's quickly go through the questions, sir. Some questions we'll be able to answer, sir. So this is some time over there. Clean note policy, I have given here just 6 simple sample questions only. RBI issues guidelines for penalties and incentives for bank branches as per which section of which act for realizing the objective of the clean note policy. Section 35A of BR Act and Section 45B of RBI Act. The incentive for distribution of coin per bag in rural areas, including the additional incentive as on date is rupees 75. Rupees 75. Incentive for exchange of soiled notes of denomination of 100. I told you for soiled note, rupees 2 per packet, provided the denomination is up to and including 50 rupees. So for 100 rupees soiled note, no, there is no incentive. Answer is nil. Question number 4. As per HO Circular 429/24, penalty for counterfeit notes deducted in soiled note remittance of to RBI for denomination of rupees 100 and above is a graded penalty linked to CPM. Okay, what is CPM? CPM, I told you, counterfeit notes per million. Counterfeit note per million. So, okay, that is the expansion for CPM. One of the incentives given by RBI for opening and maintaining currency chest by banks or centers having population less than 1 lakh in underbanked states and is reimbursement of 50% of the capital cost. So with a maximum of 50 lakhs. Yes, that is true. So underbanked states, population less than 1 lakh, other than northeastern region, capital expenditure 50%, maximum of 50 lakhs. If it is northeastern region, 100%, maximum of 50 lakhs capital expenditure. As per HO Circular 831/23, I have taken this circular because this has come after your last exam. The last exam was on 11th November 2023. As per HO Circular 831/23, that is dated 17/11/2023, how many currency chests the bank is having? The currency banks were having, our bank is having 150 currency chests. 150 is the number of currency chests we were having as per that circular. Okay. Now we are the credit card matters. Okay, so this credit card related matters or debit card related, RTGS, mobile banking, NEFT, etc., is given digital banking policy. So Canara Bank's digital banking policy, under policy, the circular number is 55 bar 2024. From there, some important points, and from Reserve Bank of India site, certain important points I have downloaded. So here I have not made a presentation. Straight away, we are going for the question and answer series from the exam point of view. Okay, sir. So anyhow, for the credit card, I made a presentation. We'll quickly go through, okay? Because in credit card, as compared to debit card, the penalties and so many things are little intricacies are involved as compared to a debit card. Let's quickly go through the important point, then we'll answer the question. A credit card issued without a specific return or digital request or application is called unsolicited card. A credit card where the user has to pay the full billed amount on the due date without rolling over of the credit to the next billing cycle is called charged card. To get credit card, corporate borrower customers, if they have loan, borrower customer means if they have loan, the account should be in the standard asset. Non-borrower corporate customer to have a satisfactory dealing with us for 12 months if it is a credit card to a corporate. For individuals, for classic and standard cards, the minimum gross income required is rupees 1 lakh per annum, and for gold card, it is 2 lakhs per annum. For world credit card, the gross income criteria is rupees 10 lakh per annum. That means we have classic card, we have standard credit card. The annual income criteria for individual is rupees 1 lakh. For gold card under credit card, 2 lakhs per annum is the criteria. For world credit card, it is gross income limit should be rupees 10 lakhs per annum. So for the four cards, the annual income limit is given here. Cash withdrawal limit for individual. What is the maximum cash withdrawal limit? 50% of the card limit, maximum of rupees 50,000. And for corporates, it is 50% of the card limit, maximum of rupees 5 lakhs. At any point of time, it can outstand only 5 lakhs. For add-on corporate card, maximum cash withdrawal limit is 25,000 per card. So for add-on card for corporate, so for cash withdrawal limit, they are fixed a limit of 25,000 rupees per card cash withdrawal. If the card limit is above 5 lakhs, so when you want to sanction a credit card, if it is above 5 lakhs, two credit information reports to be generated from two credit information company. Credit limit permitted for individuals, credit card limit permitted for individuals is 30% of the annual gross income. For corporates, the minimum card limit is 50,000 and maximum is rupees 200 lakhs in multiples of 5,000 rupees. So for individuals, the card limit, whatever may be the various card limits, various sanctioning authorities are there. The maximum they will fix 30% of the gross annual income. Coming to corporate, the card limit is minimum card limit is 50,000 and maximum is 2 lakhs in multiple of 5,000. This they once they ask. Validity of the credit card is 5 years. Validity of credit card is 5 years. Staff members should have a minimum annual gross income of 60,000 and minimum take-home salary of not less than rupees 4,000 per month for avail the credit card facility from the bank. Here I have a doubt. I will check up and let you know. Validity of the credit card, whether it's 3 years or 5 years, I will check up and let you know, sir. If somebody knows, you can also send me a message after the class is over in my WhatsApp. Staff members should have a minimum annual gross income of rupees 60,000 and minimum net take-home salary of not less than 4,000 rupees per month to avail the credit card. Then corporate credit cards to be issued at least with one add-on card. Maximum add-on cards for corporate customer is 99 with minimum card limit of 25,000 each. For revolving facility, the minimum amount to be paid is 5% for the outstanding amount. Every month you want a revolving facility, the minimum amount to be paid is 5% of the outstanding amount. Balance amount will carry a service charge of 2.50% per month and it is 2% per month for the balance for the secured credit card. Okay, EMI facility for purchases excluding cash withdrawal and jewelry purchases of rupees 5,000 and above repayable in 3, 6, 9, 12, 18 and 24 months is permitted. If EMI is pre-closure charge of rupees 2% on the outstanding principal close, pre-closure charge is that if EMI is pre-closed. Banks shall seek one-time password based on the consent from the cardholder for activating a credit card if the same has not been activated by the customer for more than 30 days from the date of issuance. If no consent is received for activating the card, bank shall close the credit card account without any cost to the customer within 7 working days from the date of seeking confirmation from the customer. So for 30 days, if the card is not used, card is not activated, then bank will send an OTP to the customer. We have sent you a card, so the card is still not activated. So if there is no consent, if there is no reply received from the customer within 7 days of seeking the confirmation, working days, so bank will take steps to close the credit card. The request for credit card, suppose if the customer himself is asking for a report for credit card closure, this is also important. Request for credit card closure to be honored by the bank within 7 working days, subject to payment of all dues by the customer. Failure will result in a penalty of rupees 500 per day for delay till the account is closed. Nowadays, a lot of penalties banks have to pay. In the exam, questions will come. So, if the customer has requested for a credit card closure and if all his dues are closed, within 7 days, the credit card to be closed. If it is not there, then you got to pay a penalty of 500 rupees to customer so per day till the closure of the credit card. Then, if credit card has not been used for a period of more than 1 year, the process to close the card will be initiated after intimating the card holder. You see, if the credit card is not activated within 30 days, an OTP will come. If the customer has not responded, within 7 days, the account will be closed. If the credit card is not used for more than 1 year, then also bank has to take a step to intimate to the customer and start the process of closing the credit card account. So close the credit card intimating the cardholder. If no reply is received from the cardholder within a period of 30 days, the card account will be closed subject to payment of all dues by the cardholder, and the same will be updated with the credit information companies within 30 days of closure. Any request letter for closure of credit card to branches to be immediately requested by branches in non-CBS tech support. That is, then only within 7 days the bank can close. You can avoid the 500 rupees. Credit card accounts to be closed within 7 days of customer's request. Otherwise, banks to pay a penalty of rupees 500 rupees per day. The information regarding closure of the credit card to be updated with the credit information companies within a period of 30 days. These numbers are very, very important in the credit card. Bank should ensure that credit card bills reaches the cardholders at least 15 days before the payment of the due date, either by SMS or by WhatsApp or whatever you see, whatever method you are having. The credit card bills should reach the cardholders at least 15 days before the payment due date. All complaints received from cardholders will be redressed within a maximum period of 15 working days unless intervention of the external agencies and other departments in the bank is required. Any credit card complaint received at MD and CEO office or executive director office, head office, has to be resolved within 24 hours. Then we have a rewards and royalty points for credit card. All individual cards are eligible. Individual cards, corporate cards are not eligible. I told you have four groups, and all the four cards it's available. Two reward points are every rupees 100 spent, except cash withdrawal and for fuel usage. Each reward point is 25 paise, 0.25, valid for 3 years from the date of accrual. Cashback for minimum 1000 points in multiples of 100 points also available that will be credited to your credit card account to that extent your balance amount what you have to pay will be reduced. Then this is another point. So you can entrust for the NPA accounts under credit card to the recovery agent. So for recovery of NPA accounts and credit card, branch officials or recovery agents to contact the cardholder only between 7 a.m., 10 a.m. to 7 p.m. In the case of other normal NPA accounts, to contact the card, that is your NPA customers, it is 8 a.m. to 7 p.m. Under credit card, it is 10 a.m. to 7 p.m. A credit card account will be treated as a non-performing. When a credit card account will be treated as a non-performing asset? 1 minute. A credit card account will be treated as a non-performing asset if the minimum amount due as mentioned in the statement is not paid fully within 90 days from the payment due date mentioned in the statement. So what it is not from the date of the statement, etc. What is the payment due date? So what is the minimum amount to be? If you opted for rollover facility, the minimum amount to be paid will be there. So the minimum amount to be paid, so it is mentioned, if it is not paid within 90 days from the payment due date, the credit card will be called as a NPA. But then banks have to report the credit card as NPA to the credit information companies when they have to inform. Bank will report a credit card account as past due to credit information companies or levy penal charges, etc., late payment charges, etc., if any, only when a credit card account remains past due for more than 3 days from the payment due date. So when it will become NPA, so it become NPA. So for that is not paid fully within 90 days from the payment due date. If it is not fully, that is within 90 days from the payment due date, it will become a non-performing asset. So when you will report a credit card as a past due to the credit information company, bank will report a credit card account as past due to credit information company, review of penal charges, etc., if only when the credit card account remains past due for more than 3 days from the payment due date. So this is the payment due date. So you should not immediately report them as past due. From the payment due days, you have to wait for 3 days. Even up to the 3 days he has not paid, then you have to report this as past due to the credit information company, and also you can charge late payment charges, etc. Before reporting a default status of a credit card holder to credit information company, you see here, you see. So you have to report when? Only after 3 days of the past due. And before that, you have to inform the customer. Before reporting a default status of a credit card holder to credit information company, bank shall ensure that they adhere to a procedure including issuing a 7-day notice period to such card holder about the intention to report him her as a defaulter to the credit information company. So 7 days. So 7 days notice to be given. So it may be SMS or mail, whatever it is. So past due is today. So if it is not paid within 3 days after the past due, bank will be reporting you as a defaulter to the credit information company. So you have to give a 7 days time to the 7 days notice to the that is your credit card holder. If customer settles the dues after reporting CACs, bank to update the status within 30 days from the date of settlement. If the credit card is closed, within 30 days you have to update. If it becomes past due more than 3 days, you are informed to the credit information company. Subsequently, customer pays it within 3 days of the customer paying the amount. You have to update it to the credit information company. Inactivation fee. If the credit card is not at all used, I told for more than a year, steps has to be taken for closure of the card. So what is the inactivation fee? A credit card is not used for more than a year. If a credit card is not used for a certain threshold level for the credit card limit sanction, whichever is lower in a year, charges applicable for staff also. Example, standard and classic card. The threshold limit fixes 12,000 rupees. If it is not used for threshold limit for 12,000 rupees in a year, the inactivation fee of 100. Gold card 25,000 rupees, 150. Platinum 5 lakh, that is 50,200. Select and gold card 1 lakh, that is 300 rupees in activation fee. So the threshold limit or the card limit, whichever is lower. So if it is not used in a year, this is the inactivation fee bank will charge to the credit card holder. This is applicable to the staff members also. Then transaction fee for using credit card in cash withdrawal. Suppose you are using the ATM and you are drawing credit card cash in a month. 50% of the card limit, maximum 50,000 limit is permitted. I told you, no. So whenever the cash is withdrawn, what are all the charges the customer have to pay? Rupees 30 per thousand, minimum of rupees 30 per withdrawal. All these things are without GST. Rupees 30 per thousand, minimum rupees 30 per withdrawal. These are all the questions frequently they are asking in credit card. That is why I made a detailed study for you. In the case of default, suppose if cash is withdrawn and is not within the time limit, the cash is not replenished as per the time norm given by the bank. In case of default, interest charges at the rate of 2.50% per month, whereas applicable GST will be levied on the carried over liability till clearance, besides a late payment of rupees 250 per billing cycle. Once a credit card liability becomes NPA, it will be transferred to the card issuing branch and a separate product code. They may ask, what is a product code? Product code is 170. Per transaction made for contactless card is 5,000 rupees. Generation of bill. When bill is being generated for the credit card? So for Visa card and that is it is on 20th. Masters on Master and Rupiah card, it is 18th of the month. Cardholder can raise any dispute within how many days? Within 7 days from the date of receipt of the bill. NPA accounts can be entrusted to recovery agents under credit card. Doubtful, lost, written off, and if it is substandard, and if it is completed a minimum period of 6 months, that can be entrusted to the recovery agent. Recently, on HO circular has come, I think they would have told you in recovery class, with regard to recovery of other than credit card, so far, even substandard accounts of more than 6 months can be entrusted. Now that has been dispensed with. But still, for this, no circular has come. NPA accounts can be entrusted to recovery agents, doubtful, loss, written off, substandard if they are in substandard for a minimum period of 6 months. Time for calling is 10 a.m. to 7 p.m. Charge for replacement card is 300 rupees. Then minimum limit and maximum limit I have given for the 4 types of card what it is there. So minimum limit and maximum limit is there. Then who is the sanctioning authority for the credit card? So if it is individual, so up to 30% of the annual gross income, maximum 50 lakhs. Up to 30% of the annual income, maximum 25 lakhs. Like that it is there. So corporate, so up to this, then who is the sanctioning authority? That is also there. Quickly, let us see the question. We'll be able to answer the questions. I'll go to the PDF. So little time I have taken because frequent questions are being asked over there. That is why I'm spending some time. Credit card. Credit information report to be drawn from two credit information companies if the credit card limit is above 5 lakhs. Above 5 lakhs. Staff members to have a minimum annual gross income rupees 60,000 rupees and minimum net take-home salary of not less than rupees 4,000 per month. So 60,000 and 4,000. For corporates, the minimum card limit is 50,000 and maximum is dash in multiples of 5,000. Maximum, it is 200 lakhs. 200 lakhs. Maximum add-on cards for corporate customer is 99 with minimum card limit of 25,000 each. Question number 5, which is not correct with regard to cash withdrawal limit, which is not correct. For individuals, 50% of the 50% of the card limit, maximum rupees 50,000, correct. For corporates, 50% of the card limit, maximum 5 lakhs, correct. For add-on on corporate card, maximum cash withdrawal limit is 25,000, correct. For NRIs, rupees 50,000 per month, subject to 50% of the card limit. That is also correct. Here you see, there is no concept of per month. 50,000, etc. There is no concept of per month. So that is correct. For NRI, it is rupees 50,000 rupees per month. That concept has come with the subject of maximum 50% on the card limit. So A, B, C, D all are correct. So with regard to cash withdrawal, what is the limit we have seen? All the 5 points are correct. Question number 5, answer is E. Question number 5, answer is E. Question number 6. For revolving facility, the minimum amount to be paid, I told you, you can go in for a revolving facility. So if the revolving facility is not, customer has not opted for revolving facility, the entire amount he has to pay. What is the type of that card called, sir? That is called charged card. In the first slide, I told you, charged card. If revolving facility is opted for, he has to pay minimum 5% of the outstanding amount. Question number 6, answer is A. 5% of the outstanding amount he has to pay. Question number 7. Balance of amount. So after paying the revolving facility, so what is the charges for the balance amount you have to pay? Balance amount will carry a service charge of rupees 2.50% per month, and it is 2% per month for secured credit card. So 2.50 per other card. For secured credit card, it is 2% per month. The bank may provide EMI facility for converting the purchases of rupees. How much is that? For purchase of rupees dash, excluding cash withdrawal and jewelry, for purchase of dash and above, which is repayable in the installments of 3, 6, 9, 12, 24 months with the interest as may be decided from time to time. So what is the answer for that? That is other than jewelry or fuel or cash withdrawal. So, sorry, other than jewelry and cash withdrawal, EMI facility is also permitted if the amount is 5,000 and above. Question number 8.